Thank you for joining us today on Louder Than Green. Today we have a very exciting guest, and if you're building anything sustainable, regenerative, or just smarter than the status quo, you're in the right place. For those of you just joining the podcast, we are Green That Dream, and we specialize in helping businesses not just go green, but flourish. We focus on strategies that support people, planet, and profits by improving operations and managing resources. So if you're ready to take your business to the next level, stick around. And if you want a free growth consultation, head over to greenthatdream.com or just DM us the word growth. Now let's get into it.
Welcome to our podcast, Louder Than Green. Today we have Vibha Salgamay. She is a product designer turned real estate investor and co-founder of Relic Capital Group. He works with first-generation high earners who are doing well on paper but never had a roadmap for turning income into long-term passive wealth. After discovering real estate syndications as a way to break out of the work hard and save cycle, Vibha co-founded Relic to help others do the same. Today, she leads deal flow, due diligence, investor relations, and business operations with the focus on multifamily and senior living investments designed for steady long-term growth. Thank you so much for joining us today, Vibha.
Thanks so much, Aimee. I'm so excited to be here and to have this conversation with you.
Yeah, excellent. So let's jump right into it. Please tell us a little bit, about your role in the business and how you would describe Relic Capital Group.
Yeah, absolutely. So Relic Capital Group, as you mentioned, is a real estate investment firm. We focus primarily now on senior living investments. And the reason we started this, my co-founder and I, we realized that we just needed a place to turn to where we could support and empower people like us. We're both product and tech adjacent, or in tech. I'm a product designer by trade. I still have a W-2 full time, and I lead investor relations at Relic Capital Group. And I started realizing a few years ago when I first started investing in commercial real estate that there were not a lot of people in my personal network investing in necessarily these private investments as it comes to commercial real estate. And as I started having conversations with those in my circles, it always sort of centered around risk. Like, how do you evaluate the operator? So when my co-founder and I started Relic to put together these senior living deals, we really wanted to lead with transparency first and education first. So we wanted to bring this opportunity, especially to folks like us, first generation high earners who are trying to find their place in the world and figure out how you can compound wealth, but also do it in a mission-driven way. And so our goal with Relic is really to put the resident first, the elders first of these communities, and really bring this opportunity to operators, allocators, LPs such as, yourself or myself, who might want to invest and compound their growth in this way.
I love it. I love the mission that you guys have. I'm very much in alignment with that. So you focus on first generation high earners. What are some of the patterns that you see that told you this group needed a different approach to investing?
That's a great question. Yeah, I think a lot of what we see with first generation high earners, I myself am one of those personas, is really like how we think about, I think, saving and investing. You follow the traditional blueprint of success. And perhaps that's because the biggest risk you took, or the biggest risk your family took, was leaving the country that they had roots in to immigrate, and they just wanted a stability, right? So most of that, what it looks like is good education, good job, climb the corporate ladder. All that is great, all that works, but it might not compound wealth in the way we're seeing wealth compound today. And a lot of how you compound wealth quickly is through equity. And in order to get equity, in order to build wealth in that way, you have to be comfortable with debt. So a lot of the conversation we have is around, why is this debt okay? Or like educating around, you don't need $5 million to go buy this building. You can just offer a portion of that with a few other group of people and then syndicate that with an operator and a sponsor that you trust. So I think really it just comes to the education, but also kind of seeing somebody you trust go through that process end to end and realize that, okay, like let's de-risk this. There is risk, but a lot of risk can be de-risked through education. That's probably the number one thing. So at Relic, during our first discovery call, we actually just sit down and talk to you about your goals. We don't bring you a deal because senior living might not be the right asset class for you. There might be other asset classes like RV parks or multifamily or anything else in commercial real estate. So we're really here to understand like your goal. And then our primary goal and job is to help educate you on what are the risks? How do you look for a sponsor? How do you look for a track record? And so you feel comfortable with what you are going to invest in.
Nice. I can imagine that, especially, with education and creating awareness, especially with, like you talked about kind of the blueprint, right? Of what success looks like. I think there's also a blueprint that we learn from our parents that might not be necessarily correct or accurate. So I'm just wondering if some of those kind of, I guess, money mindset issues come up, and are those some of the kind of challenges that you have to deal with as well?
Yeah, absolutely. I can speak from a personal story. So myself, I got into commercial real estate because I got priced out of trying to buy a condo in the Bay Area. I live in the Bay Area. There is a number I didn't want to exceed for buying a condo. But I think a lot of what the success of Blueprint looks like in the United States, and also we go back to stability, right? Like stability oftentimes has to do with a home, and we have this narrative that owning a home means it's stable, like it's yours. And so I think for me personally, it was like, so I am from the region of South India. My parents live in the Bay Area. So I think for me personally speaking, a lot of that education and the conversation with my parents was like, hey, I don't actually think home ownership is the right way to build equity in real estate. So going back to, I think what you said about, we have this idea of what is the blueprint of success, and home ownership is a blueprint of success. And then also understanding why that might not be the right path for everybody is also, I think it takes a lot of work, and it feels uncomfortable because everybody around you is probably going down this blueprint of success because it worked for them. Like it worked for my parents. It's great, but it didn't work for me, or it hasn't worked for me. And it's like, I like the flexibility of being a renter in a high cost city. It's a little bit of that, but it's also, I think, really understanding, actually we created this like framework for our investors, and actually anybody can download it. It's on reliccapitalgroup.com, and we call it the Freedom Blueprint. And so what we try to do is we try to break down what freedom means to you, because freedom is so personal. What freedom looks like to you is different than what it looks like for me. And we kind of give you 3 levels. This is your first level. This is your second level. This is like, you've reached the dream. What else? And then that kind of helps you figure out. And actually, I did that exercise myself. And doing that exercise, and I realized when I sat down with my co-founder, she'd done a similar exercise on what wealth and family planning meant to her. We tried to put our thoughts together as a framework, because once you know your why and once you know what your freedom is, it's much easier to have that conversation with others because you've already had it with yourself.
Yeah, absolutely. I love that. No, it sounds like you guys have put a lot of thought into, it's a very holistic approach is what it seems like with how you guys are doing it. It's not just, this is the strategy. Does it work for you or not? It's really looking at the whole kind of framework of the mindset. So that's amazing, because that's super helpful. And I think it can be scary for people for investing and whatnot, especially if you don't have the experience. You do the real estate syndications. So what was it about that clicked for you guys in terms of comparing it to the more traditional investment paths?
Yeah, so I think when we say traditional, what I think of is the stock market. Is that sort of what you're referencing, Aimee? Okay, yes. Perfect. Okay, we were doing the things we were told. We were contributing to our case. We were investing in brokerage accounts. We were maxing out the HSAs or whatever the IRAs might be that you have access to. And we were seeing that all of that was moving the needle, but maybe not quite as fast enough or not as secure enough. So really, we had my co-founder and I had similar paths to where we ended up, but different triggers. So for herself, she went down the path of buying a condo with her partner and then upgrading to a single family, using debt to rent that out, getting a HELOC, and then realized that maybe there's another way to do this, because especially if you're in California or like a coast city, you start realizing that in order to kind of fund your lifestyle just for cost of living, you probably need over 10 to 20 houses in order to do that. And that's just like not scalable. That's just that's like a job in itself. And then around the time of COVID is when I was pretty serious about going down the real estate path in terms of just being homeownership, just being like, okay, been here for a really long time. I plan to stay in the Bay Area for a longer duration, so maybe I should buy a house. And then putting more than, like your down payments on those condos are a little over $100,000, and your mortgage is still higher than rent. So something started to turn. And then I think I met a few people, and like my co-founder, Radhika, she had LP'd in a lot of commercial real estate syndications. And so in speaking with her, I also had the opportunity to LP. So, and realized that I could touch my old 401k account to invest through a self-directed IRA, not necessarily savings. So just started educating myself around like what else is out there. I started listening to podcasts like Bigger Pockets and most of the commercial real estate kind of route. And once you start listening to one person, you kind of follow their train of thought and try to find education around that. And then, the Rich Dad Poor Dad book is, I think, went through all of them. And the book in that series that really shifted for me was the Rich Dad Cash Flow Quadrant, really thinking about the difference between like a business person and an investor versus like, an employee and a solopreneur. And so something started to change. And I think the education is fantastic. The networking is fantastic. I would always say, somebody was starting out, like, go to your local meetups. My meetups were amazing.
Yeah.
Just listen to the people around you and how they started. That was really sort of the catalyst for how I started.
Nice. Yeah. That's great. I mean, it is so helpful that there is a lot of information out there. And I guess it's like really just understanding what your goals are and what makes sense for you, right? Like your risk tolerance and, what's feasible and what you're willing to do. Yeah, I've definitely done a bit in real estate, and I want to do more. And it's just always helpful to have resources available to you like that. So that's so great.
Absolutely. And I will add really quickly that in doing that exercise too, like not only are you like you are learning that, but kind of putting that into action. The first step I really took was sitting down to look at my portfolio. So going back to your question about what made me switch from traditional investing to something that's an alternative. So I still invest the traditional way, but I have realized, and when I first sat down and looked at my portfolio, I realized that everything I was investing in was heavily in stocks. Stocks for tech stocks. So I started looking at that and I was like, okay, like they're all called different things. They're in different accounts because they're doing different things. But really all my wealth diversification, or what I thought was diversified, was coming down to the same core portfolio. And I was like, I don't know about that one. And that's what really kind of pushed me while I was learning from folks who had made the jump or looked at their portfolio and tried to figure out where are they investing. That's what made me like make the jump. And actually that's why we created the Freedom Blueprint. So in that exercise, it has you go through and look at all your different assets, like, and also if you could go one level deeper, like what are you investing in? So then you see that holistic approach, like you mentioned, on a spreadsheet. And then so once you have that, I will say the first time you do it, it probably takes you like 15 to 20 minutes because if you were like me, you might not know off the top of your head, and you're just like, let me go find out. And then once you do it, you have that foundation. So like, you do an audit every year and like just go see how that's doing.
Yeah. That's awesome. Yeah, I'm gonna have to take a look at that and do it. I mean, I've done similar things, but it's always nice to see the tools that people have put together, because there's probably nuances to your guys's that other people don't have. So that would be really interesting to check out. So let's dive a little bit into more of your operations. So you handle deal flow and due diligence and relationships and the operations. What does your typical week look like for you? How do you kind of divvy up your tasks and whatnot?
Very good question. So my day, usually from about 9 to 5, is primarily blocked for my W-2. So here and there, I'm very fortunate that I do have flexibility, and I have a very supportive like team and manager. As needed, I block my calendar off, usually during the lunch hour, to take calls with operators or brokers. My role for Relic is primarily around investor relations and building relationships with LPs, those who want to invest with us, or capital allocators, who are usually larger fund managers who are looking to diversify their portfolio or explore and learn about senior living. So I take calls with them. I'm on the West Coast, and I found that keeping my hours open from about 6:30 in the morning to 9 before I start work is like the sweet spot. And so so we're recording this now, and I know being on the West Coast definitely has its advantage before the workday to catch up with folks on the East Coast. So yeah, and then really I think one of the reasons, so Relic, we've been around for about a year and a half. We've built a portfolio and a team. And we've also really invested heavily into tools that really help our workflow. So that means like AI tools for like agents like ChatGPT or Gemini, and we leverage that a lot. We also use tools for just like tracking systems. And then my co-founder, she's our head underwriter. So we divvy up the tasks, and we treat it like a business. So every year we do yearly planning. We touch base in the summer months to see like how our business is going. So we actually we're actually doing 2026 planning in early January this year. Kind of having our roles and priorities in place helps us say no to a lot of things, and that's really how we've been able to scale Relic operationally. So we led our first full deal this year. We've done three other deals where we've had GP roles, but doing the full acquisition where we were leading the deal was the deal in Texas that we just closed in November. And so in order to do that, there were a lot of, surprise meetings. So when you are in an active deal, like you have things come up that need to be addressed right away. Just being really clear on our roles was very helpful. And we actually do that to anybody we bring onto our team too. So other GPs who join our team, we actually created a GP playbook. So going back to your operations, we have an SOP, we have roles in place, we actually have a repository where if you join our team, it's sort of self-serve. So we have documentation for what are the risks of the deal, and we have a framework that we call the probability of execution. So really like P-execute. And so we look, when we're underwriting a deal, we look for all these signals that say, what is the probability of executing on this deal? So we look at market, we look at operator, we even look at the people on the team. So it might not necessarily be the case that my co-founder and I need to be on the same deal at the same time. We only do one deal at a time. We don't like raising for two deals, but that is just something that we keep in mind too, because one of us could be a risk. All of this is people based, so it's like we really identify who are the people, what are their roles. We onboard that with the teams that we bring on too, and then we always identify a backup. So if somebody's out on vacation, someone's sick, like who can kind of fill in for them and make the decision as needed to keep us going forward. And so all of that has been operationally very helpful in order for us to move forward.
Nice.
And then
that sounds great. Yeah,
one last thing I'll just add for that is I think the biggest risk for senior living as a whole, it really is the track record and the execution of the operator. Because we, on the GP side, primarily bring the business and the real estate expertise, and we make sure that we have the allocations in place for the operator to do their jobs. One of the things that we look at in our P-Execute framework is operator track record. What is culture like? Staffing is a huge issue across the nation in senior living. There's a lot of burnout. It's a hard profession. It's emotionally taxing. So how are we there for the employees? How are we there to support them? And all of that comes down to operators. So when you look at culture, if you are in a community where folks are laughing, I've been to communities where folks are laughing that I visited 2 months ago, and there were a group of people just sitting in the garden, enjoying each other's companies. And that kind of culture comes down to the operator. Is that operator facilitating activities and environments where people are drawn out of their rooms to come? So we also look through that lens. So I think that's not just the quantitative of just, the numbers. We're also looking at the softer side of things, more of the empathetic human element as well.
Absolutely. It's so crucial with senior living, especially.
Yeah, totally.
It sounds like you guys have some really great systems in place to help you guys be efficient and moving things along. Are you finding yourself being able to automate anything, or is it still a manual process? Yeah. And I know that a lot of it is like relationship building, so I'm just curious how that folds into it.
Yeah, really good question. We use a CRM that's been extremely helpful. So personally, we use Go High Level. Mm-hmm. We also use, our investor relations. So let me speak to investor relations specifically. So you are right. A lot of that is a lot of face-to-face interaction. However, we do have curated lists of different personas. Maybe you're an investor, maybe you are a partner or a broker, whatever your role is. And we actually have created automated updates on what's going on with Relic as a company. So for example, if we close a deal, you might be in the audience where that's interesting to you. So we do have some core level frameworks in terms of so we send out newsletters once a month to everybody. And if you are an investor in our deal, you get updates about how your deal is going once a month as well. And so all of that is we had automated it, but we are stopped for a little bit because we were learning and we pivoted. Yeah. And so we do have a frameworks in place in terms of a template that we fill out during the meeting notes, and a lot of that is really using Gemini to sift through the meeting notes and put that in the format. And then after that, it just gets pulled into our Go High Level, and so we still do the final pass, but in terms of the manual writing of taking notes and editing that, all of that we've been able to automate quite nicely. And as we go into next year, one of our goals for 2026 planning is to really look and to leverage more tools to automate more. So another example is for our underwriting deal flow. My co-founder does leverage some of these tools to help with pulling data into our underwriting model. So she has created she's created her own framework that we use at Relic. So we actually go into the granularity of month by month for the P&L for the 5 years we hold a deal. And so using automation and tools to fill out a lot of those Excel cells, and then putting it into that key, the probability of execution So we're working on giving it a grade. So then at a first pass, when we look at a deal, the automated tool does most of that. And our next step in 2026 is grading it. So we can very quickly make a decision on yes or no by looking at a grade that we're giving it. And part of that grade is we also look at other assets in our portfolio to see, even though they're individual assets, it just comes down to making sure, Radhika and I can be there if we need. So we want to make sure that we are diversified in the types of portfolio, like assets that we take on as well. And so all of that goes into the grade of this P Execute, and we'll be building that out in early 2026.
Excellent. That's great. Sounds like some great plans and some, strategic growth. And it's currently it's you and your co-founder?
Yeah, it's me and my co-founder, and we work very closely with two other folks on most of our deals. But for Relic Capital Group, it's Aimee Haasteaby and myself, Vibha Salgamay.
Nice. Yeah. Nice.
Yeah.
You said you're just doing one kind of project at a time. Are you looking at being able to expand that next year?
Yeah, good question. I think so. I think next year we're going to come to a point. We were actually just talking about this as we were getting ready for our 2026 planning. Is one of the things we are hoping to map out is to bring on an analyst or somebody else on our team who can do some of the first pass. I think this first year was figuring out systems, coming up with a framework that can be repeatable, and I think we've got there. And so now we're bringing on either an intern or an analyst to help kind of sift through most of those. So the two of us are focused on scaling, and probably the timeline for that is going to be summer of next year is just sort of the goal in terms of where we're going. Our goal next year is to do 5 transactions. 5 to 10 transactions. It really depends on the deal size. The deal sizes we look for are anywhere between $5 million to $15 million for all-in purchase price. So it really just comes down to that. But our cadence is to do a little over 1 a quarter.
Yeah, it's totally achievable, right? Without being too stressful, hopefully.
Yeah, I think so. I think this year was really great. It kind of showed us that we do have the right systems in place. We both come from like product backgrounds by trade. So one of the goals we had when building Relic, and this is actually not the first company we've ventured into. So I think there is a lot of learning that you have as an entrepreneur when you've tried to scale something. And so I think one of the things personally for me, and what's shifted from trying to build company one a few years ago to this, is that not treating it as a side hustle. And what I mean by that is really looking at scalability. Like, it needs to run if I'm not there. And our goal is for it to run without us. And so I think building that team next year is going to be crucial in making sure that we stick to that scalability aspect.
Yeah, no, I'm really glad you said that. I don't think that concept within business ownership, specifically with you, the business being able to run without you, is something that business owners think about, and it's so true. And I think even people who have been, in their business for, 20 and 30 years, they don't know how to do that either. And that just hurts you in the long run, really. Because if you're not able to walk away from your business and let it run, you're really just having a job.
Yeah, absolutely. Yeah, our goal is not to have another job. And I will say, I think a lot of this sort of like the thought leadership around all of this, like one is, learned experience, but the second is also joining masterminds. So like one of the great things about having a co-founder is that you can kind of divide and conquer. So we're part of 2 different masterminds, very specific on what the strengths and the kind of mentorship we're looking for are, so we can go and seek it and learn from others who have maybe like been where we are a few years ago and seen like what would they do differently. And so I totally think that a lot of the growth that we've done this year has been possible because of the masterminds that we've been a part of, and really showing up to those in-person meetings or like the Zoom calls or whatever it is.
Absolutely.
making sure you're keeping
Yes.
that commitment.
Yes, yes. I mean, mentors and just having people to bounce ideas off, especially the more experience is always helpful, for sure. It's essential.
Absolutely.
So what are some of the metrics or signals that you guys use that tell both, kind of the business and even your investors that you're on track, and that could be from your business operations to the investments?
Yeah, absolutely. Let me speak to the investment piece instead of the Relic piece, because I think it sort of feeds into the Relic piece. When typically the framework of acquiring an asset is we put our team together and we say, okay, we're gonna buy this building. Let's say it's $5 million. We need to raise $3 million with our team. And we go and talk to investors who might be interested in investing, say, $100,000 into this. And so one of the things we talk to our investors about, and actually like any deck that we put together will have this, we're big on key performance indicators. So like you will know what the project plan is before you invest with us. So usually what that looks like for us is we always go through a 30, 60, 90-day transition plan. And that's because on our end, on Relic's side with our partners, we've built out what success looks like for us to make sure that we can deliver for our investors. And so we always, when we interview operators for, so we have a partner operator that we work very closely with in the Texas market. And before we narrowed it down to that team, we had interviewed that was an 8-month relationship building exercise. Wow. We had interviewed over 30 teams, and we were very specific in what we were looking for because we really wanted somebody who also had systems in place and also had a team in place. So one of the indicators for us was making sure the operator we bring on was also thinking about it in systems, and they were building in systems. So we have a 30, 60, 90 transition plan. So going back to the deck, when we were talking to our investors, we talk to them about what this 30, 60, 90-day transition plan is, and we actually put success metrics in our deck. What is the projected success metric? And we have a commitment to our investors that they will hear from us once a month on how the project is going. So in the first 30, 60, 90 days, they will know whether it's performed as planned. We've also had investors ask if they could talk to operators. And so a lot of times we will always have a webinar with the operator. So if somebody's looking to invest with us, we encourage them to come talk to the operator. And then once they've invested in a deal, they have access to the operator once a quarter. We'll do like a quarterly review with the operator on how things are going. So they're hearing from somebody who has that relationship with the residents and the asset themselves. And so those metrics that we talked about, that's just like a small sample of 30, 60, 90, but we actually have those metrics for the entire 5-year duration of a hold. And so our investors can track with us on how that's going, because usually when they get this newsletter from us, it's really just a project plan. It basically tracks metrics such as occupancy, how's the project plan going? So they get a mini dashboard, if you will, in the newsletter. And so they can compare and they know what the baseline was and where we're headed. And so going back to transparency and making sure that, when you invest with, and a lot of this is because I myself have invested with sponsors where, things have gone well, but I would have liked more transparency than I had. So really putting ourselves in the shoe of that first time investor and what they want. And then this is where I think my user experience background really kind of plays into it, because really making sure that we are empathetic to somebody who's doing this for the first time and who might not know the questions to ask. So really making sure that we are their guide as they kind of trust us with their capital and trust us with compounding their wealth and really doing right by the residents at the end of the day. So we do have key performance indicators for all that stuff. And at any time anybody wants to talk to us, like, we're always open doors for investors. So happy to kind of go into the nitty gritty details too. And we don't usually have that happen because we put it all into videos and people can self-serve. But there are folks who are interested in more of the granularity, and we're happy to like take a call and answer those questions.
Yeah, no, that's great that you kind of just put it up front. Like, here's all the information. And then if you need to get into more details, but generally you kind of have it covered from the get-go, which probably just helps with that trust and transparency element. That's really great. I would definitely appreciate that. I've definitely been in some deals to not have enough communication and transparency, which I'm sure is a big complaint by a lot of investors. So for somebody who is earning well but feeling behind on building real wealth, what's the first practical move that you think that they should make?
I think it's different for everybody, but I think it's very, very important to know your why. And so I'm actually going to go back to that freedom calculator. It doesn't have to be that, but any sort of exercise that helps you take an honest look at where you are and where are you trying to go is important. But I think the bigger question is, why are you trying to get there? Because freedom, Aimee, freedom to you is going to look totally different than what freedom to me looks like. So and then usually I think what I find is, if you're not sure about your why, and I'm speaking from experience here, like if you're not sure about your why and you start confiding into where you're trying to go with maybe your close circle of friends who might not have been there themselves, and then they start talking about where they're trying to go, and then then it's just human nature to start kind of maybe guessing or doubting yourself. So really getting clear on your why is really important. And so I also think that if this freedom blueprint is definitely a way you can kind of go through that exercise. I also think there's some really good personal finance books out there that really shape it. So Tori Dunlap, she has a book called Her First 100K. I think that's really great for someone trying to save their first 100K. There's a lot of self-reflection exercises in there where it really prompts you to ask yourself the hard questions. And then the other question, I just had to look at my bookshelf behind me to make sure I got the title right. But then the other one is Ramit Sethi's I Will Teach You to Be Rich. And so he actually has a show on Netflix. I caught a couple episodes there, but I think those are all really great to, if you've never sort of started this journey and you're like, maybe I'm interested in this. But I think the core of what all these books do is they really give you a lot of self-reflection prompts and have you sit with it. I think they're great. The I Will Teach You to Be Rich is a book I recommend also for couples. Like, my partner and I have been together for a little over 6 years. And the first year we started dating, we actually went through that exercise individually. And it was really helpful because it kind of gave you a framework of having these tough conversations that sometimes feel awkward.
Really?
I think it goes back to what you said in the beginning, which is like, sometimes you don't know if you're asking the right questions, or like you don't know where to start. And sometimes reading a book together, it kind of rips out that Band-Aid and makes you answer those hard questions.
You're like, I didn't ask the question, but the book did.
Yeah, exactly. I didn't ask the question, but what's your answer? And what's my answer? And let's go from there. Yeah. So I think any sort of like self-reflection book that forces you to self-reflect on finance, because I definitely think that's a muscle we need to build. We don't have finance conversations, and I really think we need to change the narrative on that. That's the only way we can sort of private investment opportunities like, syndications. Until I started talking to people, I didn't know that almost anybody could have access to this if they had the right conversations and the right education. Yeah. So I think the more we talk about it, the more we find opportunities that we might not have known about.
Yeah, no, I agree. And I love that. So, Well, thank you so much for sharing. I'm glad you mentioned the books because I was going to ask about if you had any books that you would recommend for this. So I appreciate that. So if people are interested in learning more about you guys and your services, what's the best way that they can find you or learn more?
Yeah, thank you for that. So the best way to find us is on reliccapitalgroup.com. And LinkedIn is great. I actually write pretty often on LinkedIn. So if you are interested in the behind the scenes of syndication, building a business, how do you vet operators, I'm at Vibha Salgamay. Just shoot me a connection request. Let me know that you heard me on Aimee's podcast. Happy to take a call if you have any questions. Reach out. Radhika is also pretty active on LinkedIn, so you can find us both on there too, and you can get to us on our website. But really, yeah, I think I just want to commend anybody for listening to the business operations podcast. Like Aimee's podcast is awesome, and I think that's how we keep learning and growing. So really excited to chat with anybody who has any questions on this.
Awesome. Well, thank you so much. It's been a pleasure. I learned so much. I can't wait to check out more of your resources and see how things go for you guys next year.
Thanks
thank
so
you
much,
again
Aimee.
for joining. And yeah, thank you.
Thanks for your time. I had so much fun. Well, now I'll talk to you later.
All right. Sounds good. Thank you.
Thank you.
I am your host, Aimee Haasteaby, and I would just like to say that I am so truly grateful to each guest who takes the time to share their story, and to you, the listener, for being part of this community. This show is about learning out loud, connecting ideas, and amplifying the voices of people doing the real work of building a regenerative future. Let's keep turning up the volume on smart systems, bold ideas, and the businesses shaping what's next. So please join me and keep showing up, keep speaking up, and keep it louder than green. Thank you so much. Have an amazing day.